Morning to those just showing up. Starting in a couple minutes. Okay, I think I'm gonna go ahead and start. All right. Good morning. And today's episode is 8, and we're gonna talk about again live trading update, what's going on with my trades, and then objectively analyzing your own trades and how to best improve as a trader. Uh, that's something that we've talked a little bit on here and there during my streams, but I want to focus mostly on that today. We'll talk about some other things that I haven't listed in this episode, um, or have listed under the hit points that I want to touch on. So we'll talk about some other things and do some um, potentially some live trades as well. Um, so let's go ahead and get into it. Okay, so I had a trader that was asking about for an update on my current positions, and this is how things played out yesterday. It was a little bit unfortunate. So let me pull up my charts here so you can actually see. Okay, so you guys know that I also had some pound CAD trades in at the same time. As my Euro basket. So the one that I'm looking at here with chat, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 trades open. Now a lot of people think that's crazy to have that many trades open, but as I mentioned, each trade is a very small amount. So it actually puts me in a not that much drawdown ultimately. Um, and that's why I say everything I do is calculated. Calculated risk, calculated strategy, calculated take profit and stop loss. Everything is worked out, and they all complement each other. Um, here, basically things went against me. Obviously, I mean, quite kind of a lot here. But then it started pulling back down. Now I knew that this pullback would happen at some point. It's going fairly slow on the way back down. It's pretty resistant, but it's making its way back down. And so a lot of people think, oh, you put too many trades in, there you have too many in over a span of a few hundred pips, a couple hundred pips. Um, but that's part of the strategy. I understand that the euro pound moves like this, where sometimes it will go against me, but eventually it will recover at some point. I just don't know when that's going to happen. So that's why I play it out until that works. Okay, so the pound CAD. Now let's see if I can load these trades on here so you can see everything in one area. I just had a trade that closed out as well on top of that. Okay, so these trades that you're looking at currently that closed out right here, where I was holding on to them to act as a hedge for my euro pound trades. Now the idea was to hold on to the pound CAD because once the trades on the euro pound decided to start moving in my favor, so this pullback that I mentioned just a second ago, once that starts happening, I know that this pair, the pound CAD, will start to move in the upward direction. So therefore, all of my buy positions would have been in big profit. Because the pound CAD is more volatile than the euro pound, and they act as a pretty good correlation as well, that once things start moving in my favor, the pound CAD is going to move more in my favor, and so that's why I was using this as a pretty good hedge and was holding on to it for quite a long time in order to pull out that hedge so I can close out my euro pound trades even earlier, instead of having to wait for them to close out by this moving down in my favor a bit more. I would have been able to close these out easily somewhere in this area on this dip. Unfortunately, I wasn't awake during that time, so I couldn't actually close out my positions when the market did reach this area here at this point, which happened on the 15th. So it's really, some things happen in trading. Things happen in trading that you can't really control. Uh, Things happen when you're sleeping. Things when happen when you're not at your computer. You can't be at your computer at all times, and in that case, I wish I was, but I wasn't. It's just plain fact. So the pound CAD during that same moment that you saw that I just showed you with that the euro pound just pushed down quite a bit, it bounced after that. But this is the same candle. So this candle was the same time that this candle happened. So both would have been hugely in my favor. I would have been able to close out in a pretty big profit if I closed out the entire basket of the pound CAD and the euro pound. But because I accidentally turned on my robot, which is really easy to do, so basically you just click the smiley face and click this allow live trading, or if to check it, and if you uncheck it, it won't trade. See, smiley face at the top right. If you unclick it, it's a frowny face. Now, for some reason, I thought that I had uh, this checked off, and it was a frowny face, and I was wrong. And so when the market started moving in my favor, it closed out early. Yes, it was profit, and I can't complain about that. But I totally demolished my hedge that I was supposed to have in order to get out of these trades much earlier, and I mean all of the trades much earlier. So it's not a big deal. It's a small mistake. It's a mistake that's still profitable, but it would have been uh, potentially more profitable, and I would be out of all of my drawdown at this time. Okay, so I hope that makes sense. I'm not sure if it does because I'm not sure how skilled a lot of you are that are watching currently in this kind of trading. But that's what my plan was and didn't quite work out the way I wanted it to. So here is my current position that I just entered. So I entered at the peak here. There was an inside candle, new high inside candle, really good position, just closed out for profit. I mean, it's not a lot of profit on this account, this size account. As I said, a lot of my trades positions are low volume, sorry, low risk. So this trade turned out to be just $11.49. But it was a really good entry, almost no drawdown, of about 13 total pips, and we came out with 50 pips profit. Okay. Um, so the euro pound is still on its way down, but like I said, it's moving slowly. We have a small trend line here, and we'll see if that continues up. We basically made the peak here, higher. Let me delete this. Peak, lower high, lower high, lower high, lower low, lower low, and we'll see what happens in this area. Now let's see if it shoots up from here and breaks this level, and then we could be the continuation on the upside could be in effect again. But I hope that this continues down. We break this level here, and then we continue on the downward spiral. But it's Friday. There's not a lot of time left, so we'll just have to wait it out and see. But I would imagine that I'm probably going to hold on to these trades over the weekend. Okay, so today we wanted to talk a lot about my second point, which was objectively analyzing your own trades and how to best improve as a trader. Now, I just kind of touched on that a little bit, what what my plan was, and my plan changed because I had a mess up, right? And so there is room for improvement there, is making sure that I'm not getting lazy or um, basically that I'm watching closely enough. And what I did here wasn't that great, so I had to make adjustments. So sometimes your plan breaks, or you break your plan. Sometimes it's an accident, like I happened here, um, and you have to make adjustments. But that's how what you need to do is break down what you did wrong, how to improve it, and what you did wrong will happen again. Um, because likely you don't want those things to happen again, but you know, trading is very emotional. And so the mistakes that you made, a lot of times people fall to those same mistakes again, over and over again. And I'm not really sure why that's the case. It's probably because trading is kind of an emotional thing, and it's hard not to fall into those traps, especially when greed is in the way. Uh, so uh, back to my trades. I'm almost for those that are just now joining further. Uh, I only have a $90 drawdown, which is just over one. It's like almost 1.5%. So it's not my drawdown's not bad right now. So analyzing your trades and what you've done in the past is really important because especially if you have an EA, for example, I can actually it makes it a lot easier to analyze because I can list my trades on chart. You could probably do the same thing uh, on live trades. I think you guys know how to do this. Basically, you just pull, drag, and drop your trades onto the chart, and we'll show you where they were entered and where they exit. I didn't even know that trick for like 10 years. Um, so analyze your trades to see what you could have done better. Were your entries good? Were your exits good? As you can see, my exit wasn't that great right here because it moved up a lot higher. And like I said, that was a mistake. And not a mistake because of hindsight, because I knew this was going to shoot up more, or I closed out here as precaution. No, that wasn't the case here. I closed out here by accident. I wanted to hold on to this much longer into about this point up here. But yeah, mistakes happen. Okay, so I don't become redundant. Um, how to analyze your trades, or analyzing your trades and becoming better, uh, is easier said than done. Um, and I think the best way to go about showing you to do that, on how to do that, uh, let's do some mock live trading right now. Okay, so basically what I'm going to do is I'm going to load up an EA, and we're going to look at the charts and see if our entries were the best on chart. And based off of that, we can make adjustments to see if what we did was the best choice. Because it's really difficult to make those decisions after the market has already played out. Um, and you look in hindsight, you say, oh, well, I took out this trade too early because it continued to move up. And I see so many traders doing that where they're kicking themselves for not holding on longer when they intended to close out at that point, and it was their plan. So they wish that they broke their plan in order to come out with more profit. Um, that's not good. You should be happy if it's not a mistake. You should be happy with the the profit that you make on your trades. Um, so let's start this out. Okay. So we're gonna load up 2010. I'm actually gonna do a more random time because I don't want you guys to think that I'm like trying to just pick up some time in the market that I already know what happens. That's not what I'm gonna do here. Um, okay, so here we go. So we're gonna look at the market here and see where it goes, and we're gonna place trades on the chart and show you where I would place my trades based on the price action. Now I've done this before with in some of my streams, but I'm doing this today because I feel like this is a good opportunity for those that have not seen my streams before, or even for those that have, how to analyze our positions and how to stick with our plan and potentially how to improve it based on taking trades right here in front of you. Okay, so I think this might be an inside candle. High 687. No, it's not. So that's not a position. So guys, I'm going to be taking trades on engulfing candles and on inside candles as well. And so that's, as you know, that's typically what I like to stick to. And this way, since we're using the strategy tester, it will allow me to not use hindsight to blind my judgment. And we'll be just taking and looking at the trades as they come. And this way you can also see how I trade as well. So if you're looking for a profitable edge, watch what I do here because it should be able to help you make some profitable trades as well. So keep in mind, guys, that I typically trade on the pound CAD and the euro pound because these pairs are great for range trading and they are good for basket trading as well. Okay, so there was a potential area for a entry. I'm looking at it right here, but it wasn't good enough because I wanted it to be above this peak here, and this candle wasn't. Not good enough a position for me. So let's load up my template so you can see this better. Okay. So sorry for those that think this kind of stream is boring, but you will get an idea of how my strategy works and what my plan is, um, so you can potentially follow, and how and what things I can do and what you can do as well to potentially improve the strategy that I'm showing you here. Um, okay, so this is a pretty close entry point here. It's not the best looking position. It didn't break the low here, but I really like the candle here. It's a engulfing of the previous candle. It has a nice wick on the bottom, and so I'm going to take a position there. And my take profit will be, let's say, a set 50 pips. Now let's see how good this trade I guess plays out. As you can see, I did get marked it a little bit late, but it was about 22 pips late, so we're going to actually mark it exactly where I stopped it and see how this trade works out. Okay, so we're looking for 50 pips here. And you can see that it almost moved. It moved 45 pips, and then it closed back down. Okay, there we go. Oh, I gotta pause it. Okay, so this trade worked out. We entered late, but it shot up. There was potentially an exit signal here on this candle, but it didn't quite move. It moved just about to our entry point, and it shot back up. I don't typically look for stop losses or to close out trades early. I will typically enter on a basket if it goes against me and look to get out at break even or small profit. As you can see here, it moved out up to our profit level, which was about here, 50 pips. Now, what could we have done to improve this trade? Well, one, we could have entered a little earlier. So the entry point would have been right here. So I'm marking this vertical line. So as you can see, our entry would be right on that candle. So what could we have done that's better? Well, we could have entered on at 60981, and we could have watched for something, and that is that the whole number is right here. So the 6100 is right at this level, and so this is kind of a place where we should be watching in general. And so a good entry, an entry there would have been a great place to go. And as you can see, it shot up, it went back down, and it shot up again, profit. So 50 pips profit, that's fine. But maybe we could hold on to this trade a bit longer. Let's see what we can do, either adding indicators or looking at different price techniques to see how long we could potentially hold on to this trade and see if it benefits us in any way. So 50 pips take profit. I think that was right about there on our entry. I need to remark our entry. Okay, that's 60 pips. Okay, 50 pips is right about there. So how to watch for this to see if we can extend our profit. So initially we'll probably be looking up at this level for a take profit, right? Because the price hit there in the past. So current price might find support or resistance up here. And so we should be watching for that. So this could be a good place for an exit, right? So that's one clue. But what about candlesticks? Maybe we could use this price level up at the up this peak as a starting point for where our take profit may be, right? So we could we're holding, and we need some kind of indication of a candle that shows that price will stop at this point. So we're going to press the continue button. Okay, so we haven't had, price has not shown us yet that this is going to be a place that the market's going to stop. Now we do have an inside candle, but this is an inside candle on the bullish side. So that means that this is a pretty good indication that price is going to continue in the upward direction at this point. So if we were holding on to this trade instead of taking the 50 pips profit like we did here, we would still be holding on to this position as I don't see a reason to take it out here. Now, there's a couple of other things that we could be looking at. Is this place up here? There's also a hold number up here, or close to it. 6,300 is up here. I mean, you could use this as a place that if there's a hold number and resistance here, that could be a place enough of a reason to pull out of this trade. And if that were to be the case, we would be looking at about 223 pips profit. Now, since I don't see any indication for a reversal here, at least with the candlesticks, and this hint right here, because of this inside candle on the bullish side, I would likely use that as a indication to continue to hold on to the trade, even though the hold number here is placed here, and the resistance level here. Okay, so let's continue to see when we would exit this trade. So still holding on. We're up at 6,400 now. 6,400, but I don't see any candlesticks yet that are showing me any indication that this is going to stop. Now look at this right here. This is a wick candle here with a body that's larger than the open of the previous candle. Again, more indication that this is probably going to continue to push up. All right, so it looks like it's kind of ranging a bit up at the peak here. Okay, so I'm looking at the candlesticks. I don't see any indication for to get rid of our position yet. So this was close. Looking at this candle right here. Now I'm looking for a wick that breaks the previous, many of the previous candles. It didn't break the high, this wick right here. But I wanted to close a good margin below the opening of the previous candle, and that didn't happen. So we're going to play this out, and we're continuing to hold on to our long position here. Okay, so we're losing out on pips here, right? Because it's pushing back down. So when do we exit? Okay, so we could exit at our initial take profit of 50 pips, or we could exit at a hold number somewhere. And a good place to potentially exit is either 50 pips, so we'll come out at least with 50 pips, but we lost out like on 200. So this is our mark for 50 pips. So if price gets to that point, we can close out. All right, so it's seems like it may be wanting to push back up. Okay, there we go. That is probably an indication for us to get out of the position. I'm looking at this candlestick here. This is a bearish engulfing. It did make a new high of the previous candle. The body of the candle closed is larger and closed below the previous candle. That would be a good exit signal for me. Yes, I was a little bit late catching it because of the tester. But that would be a closeout of about 232 pips. Okay, so pretty good profit. Now, is it the best that we could have done on this trade? No, because the best that we could have done, it was the biggest move from the bottom to the top, right? That's 330 pips. Well, it's, as you know, it's really difficult to peg the, or know where the top is gonna be. Um, and so we tried to base it off of the price action and the candlesticks, and it started moving against us. So unfortunately, it might have been better to close out at this resistance point right here, this previous resistance point. And we would have banked at least the same amount of pips, but we wouldn't have known that. That's why I like to use price action when manual trading. Uh, Basically, just the candlesticks. I mean, I guess that includes price action as well. But using the candlesticks to give us some hints into where price is going. So let's see how the trade continued to play out. If this was a good place to exit. Now, if it's a good place to exit, that means that we want price to pretty much reverse all the way back down at this point. I don't know if that's going to happen. It looks like it may not, but it's hanging around in this area. I would think that this is going to push up the way it's looking right now. Okay, so it's still using this area up here as a resistance point, and it is now shooting back down. Okay, so now let's look for another entry point and to see what ideas work best. Now, what did I just do here? So we analyzed the trade that we picked, and so I'm going to mark the position, the initial entry. So the initial entry was here, right, where I marked it, and this is a long position. Now we saw how price played out with a 50 pip take profit, a solid set take profit of 50 pips. Now, if we wanted to increase that, we wanted to see how price would behave if we held on to the position longer. And how long would that be? So as you can see, I'm analyzing my positions. I'm analyzing my technique. I'm seeing the best way to squeeze out more profit with potentially less drawdown. And that's something that you should be doing too, is exploring every possibility of your trading system to see what technique or what risk management or what entry points can be improved. And you could do the same thing with my strategy as well. And so I'm giving you some ideas of how to go about that. Okay, so let's look at taking another position. Okay, so this is a pretty good trade right here, opportunity. So we're going to move this up. All right, so it moved down quite a bit. It's not huge, but I would still take this position. It's 267, well, about 70 pips from the top to the bottom. And we're looking at the inside candle setup here, right at 1.62317. The inside candle set up there, and we're looking for the market to push up from that point. Let's see how this plays out. Okay, so it didn't work out. It doesn't mean I take a stop loss. No, I'm not taking a stop loss here. I'm actually going to add to this position. Now, there's a couple of different things that we can do to add to this position. Now, you know, basket trading is a thing that I do. I do have stop losses on every single one of my trades, but they're pretty wide of anywhere from 300 to 500 pips. Now, in this particular case, we are going to stick to looking at price action to see when our next entry should be. Okay, so we know that price likes to find the whole numbers for potential areas, natural areas of support and resistance. So we're going to mark the next whole number. We're going to do 5 pips above the whole number because a lot of times price will hit just above it and then shoot back up from there. So just to be safe, that's what we're going to do on this trade. And it looks like our second entry didn't trigger. So I want price to hit this level and it'll bounce off of it. But it looks like it's just going to stay around the area right now, at least, of our first entry. So we're looking for initially our first idea was 50 pips profit, right? So that was it. I believe, yes, we had 90 pips here. So 50 pips seems to be working on both of our trades so far, right? So we'll trade the past trade and this current one. 50 pips was really solid. So let's see if we can extend this a bit further. Okay, so we're looking at the next levels of support and resistance. Okay, so we're going to delete this second entry for now. And I hope you guys can follow along with me because this is uh, I don't have like the best tools to mark my positions, but again, the original position was entered right here on this inside candle setup. All right, so you can see the bearish candle, you can see the bullish inside candle directly after. So the next our entry would be on the candle right after the inside candle, the bullish inside candle. So this is something that you could look back. This strategy allows you to look back and see what happened in previous history. But I'm taking it one step further and doing it through backtest, so I don't have to see what happens next. And I picked a random date in August, which is usually a bad trading month because it's really volatile. So where is our next place for resistance? All right, so we're going to be looking up at the same spot like we did before, which is about the 6400 area, 64.2, but we're going to just mark the whole number as our resistance point. So this could be a place for us to take out our position. Why? Because it's resistance on two different levels in the past, and it's also a whole number. That's could be a good enough reason. But most cases, I like to see the candlesticks give me a hint that it's actually going to reverse at this point and shoot back down. Because if it doesn't give me a hint that that's going to happen, then the potential for it to shoot up is possible. And so that's what I like to see. So we're going to continue this out and see what happens. Okay, so we're looking at price here, and none of these candles here really show me any kind of reversal happening, although it could. It could shoot down here, and we could come out with less pips, but we're going to wait it out. Okay, so it's going down. Now you remember our first entries here. Okay, so we just hit our original entry. So this isn't really working out for holding on to the position, right? Because we didn't get any indication here that this was going to reverse and go back down. Although it did. It pretty much hit this point and went back down. All right. So unfortunately, this trade holding the trade for an extended period of time didn't really work out for us that well. But we're going to continue to play it out to see how this trade, if there's a way for us to fix it. Yes, Krashev. Before I come back to this, guys, we're going to take a little side note or trip to the Euro Pound. Actually, no, I can't do that right now. Um, hold on a second, Krashev. Okay, so I can do it on the on my VPS. Oh shoot! So we had a trade that closed out. I had another. My EA is having some problems, guys. It's really unfortunate. So let me show you what just happened. My EA is closing out trades by itself, and that is a big problem because that means that we're coming out with unnecessary losses. So that loss was probably pretty substantial. I'm just now seeing this. I didn't know that this trade closed out. There it is. It's a $53 loss, which is about 1%. So it's very interesting to see this happening. It may mean that after these trades close out, I'm going to have to discontinue using this EA until I can figure out why it's closing trades early. You see what I'm talking about here. The trade here is not supposed to be closing out at this point. Right here. So these trades closed out a little bit earlier, and this one closed out as well. Right here. Oh, this one here. So this one here closed out early as well. Krashev, I haven't had many problems with the EA closing out positions early. As you can see from my my MyFX book. It's going to show a loss today. because of that trade. Um, so this is what it looks like. So I haven't had any problems with the EA closing out trades early, except for here and in here. So it's just been fairly recent. So something that I'm going to have to check the EA to see why it's closing out trades early, and I don't think I should be doing that live on stream to waste people's time. But I should be looking at my expert tab to see why it closed out. It says data file. Okay, hold on a second. No, that's not what I'm looking for. So yeah, Krashev does have a point though. Be careful with EAs because sometimes uh, they can have problems. This is an error because it says that it was closed in pips profits and it was not. So this is an error coming from the EA. So that's something that I'm going to have to go to my coder about. Unnecessary losses. Wonderful. It did close out the worst possible trade. So what's going to happen here? Because I had the loss that I showed you right here, for those of you just joining, this is an EA error. This happens sometimes when trading EAs, and it closed out a trade early, and that's not supposed to be doing that. So I may hold on to this trade a bit longer on the way down. So if it's moving back down and it's going to close out in profit, I'm actually going to disable the EA and let it roll down a little bit further. And disabling it means that trades won't close out, at least they shouldn't. And I can close out manually the EA with more profits than it would without. So that means that unfortunately, I have to make up for a loss that happened today. So a 63.63% loss. Really, really quite irritating actually. Um, that my EA is closing out trades all of a sudden after 4 months of not doing that. It could be an error with a broker, with Oanda, or with the EA, but it's something that I'm going to have to get back down to the bottom of. Okay, so let's pick up where we left off, which is we're talking right now about the objectively analyzing your own trades and how to best improve as a trader. Now, I'm just mentioning to you right now that obviously we're having some problems here with this EA. And that is something that needs to be fixed in order for me to become, well, a better trader. I was analyzing my positions, the ones, why did my EA close out this position? And what was the problem behind it closing out and why did it do it? So that kind of analyzing is important if you're using EAs, because obviously this isn't trading the strategy correctly if it's closing out trades too early or when it's not supposed to. So crash out. Sooner or later, EAs will blow up your account. Ryan, does your parents know what you are doing up there in your room? What? That's what Krashev says. So Krashev, uh, I know I look young, but I'm actually 31. Um, and the trades that I'm taking here, you say that every EA will eventually blow your account. That's not true. There are people that use EAs all over the place that don't blow accounts and haven't blown accounts for years of live trading. So that statement is not correct, unfortunately. And a lot of EAs will blow your account. I would say the majority of EAs will blow your account, but there are some that are good out there. And this EA that I've created follows my strategy, so we don't have a blown account. That's always possible that could happen with any strategy, but I've taken some steps to help prevent that from happening, and that's how we've gone about it. Okay, so let's continue our setup here on this insight candle setup here on the pound CAD. before we end today. So this is our entry. We wanted to hold on to this trade up until about here. We were going to see how price behaved. As you can see, it didn't quite make it up there and it pushed back down. And now we are in the negative on our position. So we have the option of entering at the whole number just below that. But that's a little bit tight, isn't it? It's only about 30 pips. But I'm actually going to take this this whole number entry as a second entry. So this would be entry 1, entry 2. Okay. And we'll see how this plays out. Okay, so entries 1 and 2 didn't really go well for us as this pushed further down against us. So our third entry would be at the next whole number. So right there. So that'll be our third entry. Okay, so we're seeing how price is behaving at this level. It's looking like something's going on at the whole number here, but it's continuing to slowly fall back down. Okay. Oh, shoot. Saw this inside candle set up here, so we would have now. I'm going to delete this. Now we have 4 trades in. Okay. So 1, 2, 3, and 4. 4 at the bottom. The inside candle set up here at the bottom. All right, so we didn't have a whole number hit yet. I don't think it did. Actually, yes, the whole number was hit down here, but we had inside candle set up as well. So good entry, and then we'll see if there's a bounce. Okay, so we want to take about 50 pips profit. Now it might be a little bit difficult to guess where that would be. 125, 170. So it would be probably right about in this area for our exit. And we'll see if price actually gets to that point. I'm going to mark this as different. So we're going to make this green because this is going to be our take profit point. Let's see if price hits that green bar. And it didn't. It's going back down at this point. Okay. So we're still finding support at this level, and there it goes. It broke. Okay, so we had a really nice engulfing candle at the bottom here. Okay, so we wouldn't enter again because we already have trades in at this point, after this candle hit, so we wouldn't take any more positions at this point. We just let our 4 trades play out, looking for take profit, which is the green horizontal bar. Okay, there we go. Profit was hit, and it extended as well. So this is the strategy that I'm using with a set take profit amount, which is roughly about 50 pips. This would be about 50 pips profit, maybe slightly more. Okay, so how about we delete this and see if we can find what we did in the past to see if we can extend our gains on this trade. So the next support resistance point that we'd be looking for is up here. So we're going to mark that. Oops. Okay, so we're going to see what price does near this area. Right now we have a wick candle, not showing us a lot of indication yet that this is going to move down, at least from what I can see, and it's still pushing up. Okay, there we go. Oh, that's our exit point. Exit point right here, inside candle. So our exit point would be right where our first entry is. So this right here would be our exit. So how many pips is that? That's 234 from the bottom. That's 140, 50 to the second to the bottom order, 50 pips, and then a break even. So what are we talking about? 300, over 300 pips, maybe 350 pips profit on this setup. So our what's working here is our setup for 50 pips is working the best. Why? Because we're having the least trades entered for having a set take profit amount. So 50 pips is in this case on this pair. And the extending it can work, but there's also a huge drawback to that, because if we're trying to play our profit out and let our profits run, then there's drawbacks to that too. And the drawback is that we don't know how far it's going to keep running. If we're waiting for our profits to extend further, then we may lose out on a lot of pips because we held on too long. So that's why I feel like, yes, you can be greedy and try to extend your profit on your trades, but the drawbacks to me outweigh the positives, because because you just can lose out on so many pips that way. I find that you lose more pips by holding on to your profitable trades than gaining, honestly. Maybe that's something that'll be hard to prove to you guys that's the case. Um, but it's something that I continue to press on. That we had two trade setups here, and what happened on the second setup was that we tried to extend it a bit further, and because we tried to extend it, it went against us, and we had to enter 4 positions. We'd enter 4 positions in order basket positions in order to get out of this trade in a profitable way. Yeah, we ended up coming out with 350 pips or so profit if we would have let it extend later on. But there's that we had the overall risk of 4 trades is not worth it to me. I would much rather have 50 pips profit from one order than 350 pips profit from 4 orders. Yes, maybe I'm crazy, but it's because of the risk involved in extending, not extending, but the risk involved in having more orders. So I'm a strong believer of clean profit. Now, it's not always clean, as you can see, uh, because of my current trades. Sorry, that's not. Let me see. Where is my? Okay. Okay, so here is my current setup. Now, you'd say that this isn't that clean, right? It's not. It's not clean at all because we have so many trades in it. I don't like when this happens. And obviously you guys don't like it either. It's not great. It doesn't look great. And people start getting freaked out, like, oh, why do you have so many positions in? What they don't realize is that my risk is low on this, and this is all calculated. That I can extend this far. Now, the most that this has gone is 200 pips, just over 200 pips from the bottom order. Well, this lower trade just recently closed out, but it's moved up about 230 pips. Now, I'm able to extend 500 pips against me before I start closing out trades and accepting that this trade is bad and we need to move on. That hasn't happened yet. 230 pips was the max that it went against me, and it's going to probably continue to push down at this point. But now I'm having to deal with a different situation, which is a trade closing out on me by accident, which caused almost a 1% loss. Well, it's showing me about 6.6% losses because I had a pound CAD trade close out today. So I think that's probably where I'm going to stop today on Friday. And the reason why is because, or I'm going to leave you with this for the next 5 to 10 minutes. You guys are looking to be profitable traders, right? I don't know if you're looking here for a strategy, uh, if you're watching my stream for a strategy, if you're watching my stream for ideas, or really what you're watching my stream for. I mean, is it to get hints? Is it for practice with your psyche? Because trading their emotions are a large part. Because and is that something that you're looking for guidance on? Because I do find it to be one of the more important things. How to handle those drawdowns. How am I handling this whole drawdown right now? And maybe I can use that as an example. How I'm handling this is because I know that at some point within a 500 pip range that this euro pound will push down and I will get some kind of pullback. And knowing that, it helps me to it comforts me to know that in most cases with my strategy, that's what the previous history has shown me uh, to take effect on the euro pound, is that it behaves in this way, and so I can expect it to do something at a certain point. Now, knowing that eases my soul, I guess. It allows me to be able to sleep at night, knowing that I'm not going to be killed for some reason on my trades, and that I have a lot of uh, give on my trades because my stop loss uh, is very large. So because it's large, it gives me room to come out profitable on many of my trades. So we have some questions coming in. I'm going to try to answer those. Um, okay, so got disconnected. Ryan, what happened with the euro pound? Well, uh, let me see if I can make this story short and sweet. The euro pound has been pushing up in a big way over the past since March, well, since February 28th. It's been pushing up, and that's been because of the very weak pound in general. There's been a lot of stress and pressure on the Brexit still, and when that's taking effect, and it's caused the euro pound to push up in a big way because of how weak that pound is. Uh, and we have had a bit of a pushback here now, or a pullback, and that's because the pound is starting to have a bit of a recovery. Um, and let me see here if I can pull that up. Okay. Okay, so this is what the pound's looking like on recovery. So it's moved up from the bottom to the top about 275 pips. That's a pretty good recovery, and you can see how long this downtrend has actually been in effect. It's been a really long time. Ever since the January, pretty much. Since January 31st. You can see the peak up here. So January 2nd, actually. And it's moved down in a pretty solid way. This is the biggest recovery currently that it's had since January the 2nd. And so I'm able to, and that's why, pretty much why my euro pound is behaving the way it is right now with this push down happening. The pound has been a big driver for the euro pound lately because it has been so volatile. The euro hasn't been that volatile lately, and it's because of, well, the euro US dollar at least hasn't been that volatile because of um, there's so much uncertainty with the euro right now, um, and in the US. Trump has caused a lot of people to stay away from the market, and because they don't know what's going to happen. Um, the euro isn't great too. The conditions over there are not fantastic, and the future is unknown too. And so the euro is just not been that volatile, but people are taking the pound and running with it, and that's why we've had this kind of behavior on it. Okay, um, so if you're looking at my stream to profit in the market, I'm showing you exactly how I do that. Yes, there's some trades that have closed out with my EA early. It may be an indication to me to either modify my EA to make sure it's not closing out trades or that it's closing out trades when it should, or to even potentially start manual trading, which is something that you guys may find more interesting because it's something that you can do and you can follow along with better. And I'm considering doing that because the stream that I have here is actually getting more popular, and we're getting more viewers every single day in my live streams. So I'm happy to see that, but I want to give you guys more, and so please continue to let me know what I should talk about because it is kind of weird just talking about things by yourself. I mean, I have questions that come into the which are nice, but send me a message to YouTube or Forex Factory to let me know what you would want me to talk about. If you want me to look at specific pairs to talk about pairs and how they behave on the fundamental side, or even the technical side as well. So we have some more questions here. What happened to the grid martingale and never a good idea in long run? What? Uh, let's see. What happened is grid plus martingale is never a good idea in the long run. Okay. Yeah. Good point, Krashev. Grid trading has gotten a bit of a bad rep, especially at forexsignals.com. Some of you that are watching right now may be from forexsignals.com. And you feel like grid trading doesn't work because most traders put too many trades in, and it causes a big problem later on, um, because then you're in too deep and the market's not going in your favor. So basically, you keep adding to a losing position. That can be a big problem. But if you know grid trading well, um, then you can show the positives in using it. Um, Krashev says that grid trading it can be negative, but have you seen it as positive? Because I'm showing you that it can be positive as well, just in my stream here and in my performance test on my FX book. Uh, Now this isn't martingale trading. This is not martingale trading. Martingale trading is a little bit different than you think, Krashev, and I'll clear that up with you. Uh, this is basket trading, which means that you have the same lot size on each trade. Okay. Martingale means that you're increasing your lot size per trade. So if I did, hold on. So if I did 0.03, the next trade size would be 0.06. The next one would be 0.12, and so on and so forth. It means that you're doubling your lot size each time. This kind of martingale strategy, I have never been able to get to work. In any of my testing, in any of my back testing, any of my EAs, nothing has worked. And I've had 100 EAs that all have implemented or been capable of implementing a martingale type of strategy. It does not work in the long term. Now, it can potentially work if you're a scalper and you have some kind of something in place to help with the potential risk involved. You need a lot of margin for one and a pretty large account in order to make martingale to work. Uh, uh, in order to make it work, but it's not worth it in general. It takes too much. It's too risky, so I don't recommend it. Um, okay, let's see. I've got more questions coming in. Morning, Ryan. How did a GCAD close out accidentally? Yeah, I mentioned that a little bit earlier, Robert. It was a mistake. I actually closed them out. Uh, I thought that my EA was disabled, and it wasn't. So basically, allow live trading was checked, and I thought it was unchecked, and it closed out trades automatically at a set 50 pips. Which I was pretty disappointed about because I would be out of these trades right now on the euro pound if my hedge didn't close out. It was a mistake, and it was a profitable mistake. But the thing is, Robert, is that I was just mentioning, I don't know if you saw this, but I had a trade close out on the euro pound, one of my basket positions, and it was an error. It's continuing to give me errors for some reason. I don't know why, and so I'm needing to check that out at a later date. So that's something that if you're wanting an update with my system, that's what's happening. And once this trade closes out, I will probably discontinue using the EA until it's fixed. That means I will be doing manual trading. Okay. Dump EAs, do manual trading. All right. Uh, yeah, Krashev, that's basically what I just said. I won't be dumping the EAs because I feel like there's a benefit to them. The benefit of using an EA with my strategy is the idea of being able to use a grid. And that's a set. A grid is basically a set amount of pips that you can use. So I have my EA using a 20 pip grid. So when a trade goes against me by 20 pips, I'll enter another trade. And if it goes a further 20 pips against me, I'll enter another one, and so on and so forth. Now, it means I don't have to sit in front of my computer all the time in order to pull that off. And I get the best opportunity for a pullback to happen as well. So that means that you see my top order is right at the peak of that move back down. It's because I'm on a 20 pip grid, and it allows me to catch every possible price movement, and it will potentially let me get out of trades earlier because my grid is pretty tight of 20 pips. I can't do that with manual trading, and I have to adjust and take trades based on what I was showing you with the price action and the candlesticks. That's fine, but I have seen that over the long run, using a 20 pip grid with this type of trading is more successful. Do money. Show us you do money. Tell how you do money. If there is no profit, there will be no viewers. That's true. But you can see that I am in profit. 16% since November of 2016. So I am in profit, and you can also see in some of my other past accounts that I have done pretty well on some of my past accounts at other brokers. But I've had some bad accounts as well. So let's see. Okay, but it's still grid trading. Adding positions is already losing positions. Krashev, a good point. Yeah, I touched on that. The idea of grid trading is that you're adding to a losing position, but the thing is that you let's see if I can better explain this. I know I'm going a little long today, but that's okay. So let's look at my bottom order, right? And let's look at the top order. Yeah, so price went against me this whole way, and I kept entering trades, right? That doesn't look great. But the thing is that this trend, this move up, can only last for so long. It's a fact that when the market pushes up, that there's always going to be a pullback. Whether that pullback turns into a complete trend change, or if it's just a small pullback. I mean, you can see that, and that happens all the time. Okay, we have our entry, push up, small pullback, small pullback. I mean, these ones are tiny, but they always happen. This is much larger. This is the bigger one here. And the potential start, this pullback, is the potential start of a trend change in general. So the thing is that the reason why I add to these positions is because I know at some point that this will recover, and that I will come out with profit on these trades because I held them out in this specific way with the 20 pip grid and my initial entry. And that's why I add to losing positions, is because I have a plan. The plan is that this is the personality of the euro pound, that as long as it stays within 500 pips from my initial entry, and right now it's only been about 250, then this trade is still potentially a profitable trade for me. Okay, okay, I'm still reading the questions. You should do anti-grid patterns, adding positions to positions that are already in profit. Okay, that has benefits, but also potential downfalls as well. Okay, let's see. Let's say that this is a complete opposite positions that I entered. So you see all these cells. Let's say that they're all buys instead, right? Okay, so they're all buys, and we're buying. That would be in really big profit at the peak here, right? Problem to adding to winning positions is that we don't know when that pullback is going to happen and when the trend is going to change until after the fact, right? It's impossible to really peg when the trend is going to change unless you're completely lucky, and that's That is a fact. There's no way of really knowing if the price is going to reverse at a specific point in the market until it actually happens. Um, and so that's the problem about adding to these positions, is that where to exit, where to pull out of all these long positions, were, as our example, if they're all long positions. You could do a trailing stop, you could do a hard stop loss, you could do once it goes down a certain amount. But the problem that a lot of times happens is that most traders will hold on to their position thinking that the trend is going to continue back up, and so they hold, and then eventually this trade here either turns into a break even, or even small profit, or even a loss. So what's the point of adding to a profitable position when you're going to lose pips that way as well? Because if you're adding to a position, to winning positions, that means that the top trades up here, when they start moving against you, you're losing pips, and then you close that way. So, do you get what I'm saying? Is that there is no winning solution? That the difference uh, of adding to winning positions as to holding on to a standard position is no different. But that's probably just who I am. I like to have a set take profit amount on my trades, because therefore, in my mind, I'm not losing out on pips, because my take profit, my destination, my projected place that I want to be was hit. So the thing is that when we're adding to positions, we don't really have an objective. We don't have a plan. We're trying to read price to see what happens, but we don't have a set pip amount that we're taking, and we're trying to negotiate with price to see where is that best to do, and emotions can come along with that, and we'll lose out on trades, on profit and pips, by doing that same thing. Okay, I'm not sure if that's the best way of explaining it. I'm not amazing at Forex lingo, so hopefully that explained it. Robert Mills, is it an Oanda thing? I don't know if it is or not. I'm gonna see if it is. From what I just checked, it looked like it was an EA error. That the EA thought it was closing out in profit when it wasn't. So something that I'll get down to the bottom of. Okay, there'll always be a pullback, but there will be time when pullback will be too small for you to close positions. See, this is too many ways people blowing accounts this way. Yeah, okay, Crash Up, again, good point. Thanks for your questions. Yes, like I was just mentioning, that the pullbacks can be pretty small. Pullback, small. These are really small, right? Pullback. Then the substantial one here, right? And yes, I do need these kind of pullbacks here that are more substantial. Otherwise, I can't get out of the position. But the behavior of the euro pound I've studied, and I've studied since the opening, since it's really started, since I can do test, which is back in 1993 all the way to 2017 current date, is a behavior that I've studied with the euro pound of it always giving me some kind of substantial pullback at some point within a 500 pip range. Because I know this, and because I've tested it over since 1993, doesn't mean that it will continue to be that way. We know that the markets are always changing, that uh, that the fundamental and political things always change the market and a pair's behavior. But since the euro pound has behaved in this way since 1993, that I can always plan on some kind of pullback happening. Now, if it doesn't happen, I have a failsafe, which is to start closing up the trades one by one, my worst trades, and the hopes that to making it to start accepting that loss, um, and moving on to better trading opportunities. So yeah, I hope that helps with that explanation. Trailing stop would close all those positions in profit. Yeah, Krashev, I've tested holding on to positions for longer periods of time, and it hasn't really worked out that well with trailing stop. This EA, so the one that I've been running, so my RMI EA actually works very well with a trailing stop on the pound CAD, a trailing stop of 20 pips, but uh, it doesn't really help because I can't have a large trailing stop of 50 pips or more. It doesn't work. Um, and I don't really know the full reason behind why it doesn't work with the 50 pips trailing stop. But I believe it's because of that reason of losing out if the market moves 50 pips and you have 45 pips and you have a trailing stop, and the market moves back down to your opening and you just lost 45 pips profit, right? Um, so there's that idea. Or if the market moves 55 pips and you have a 50 pips trailing stop, the market goes against you, you come out with only 5 pips. You see what I'm saying? You're losing out on 45 pips by using a trailing stop. And I haven't found the benefit of using a trailing stop loss yet. Uh, in live trading, I'm still searching for that. So that's not something that I'm giving up on. I like the idea of trailing stop because it does allow you to take more pips, potentially take more pips. It's not always the case because it also can potentially make you lose more pips as well on top of that. So that's why I don't really find the benefit of it yet, or haven't found one yet, is because the difference to me is the same. So maybe I can give it to you this way. If we have a 50 pips take profit, straight take profit, and if we have a 50 pips trailing stop loss, trailing profit, if the market moves 55 pips and it goes against us and it comes back down and we profit 5 pips. Okay, so we lost out on 45 pips. If we have a straight take profit of 50 pips and it moves 55 pips, we come out with 50 pips profit. You see the difference? You see how a trailing stop loss can either benefit us or it can go against us. And in this case, this example that I used, it's because uh, the market decided to go against us right almost where our trailing stop was. So I think that is a pretty good explanation for why I am pretty much against trailing stops and trailing profits. Remember, past moves do not influence future moves. So your study is sorry to say that pretty useless. This is why 99% of EAs fail delivering long run results. They algos are based on past. Great, good point. Yes, thank you. This is the kind of stuff I like. From people or people that are watching my stream to ask, because it's skeptical. I like skepticism because I always have an answer because I have a plan for pretty much every facet of my trading. And the idea of my system is based on past study or past moves, and I just said that the past doesn't guarantee future results. Every trader knows that. But the thing is here is that every single system that every trader uses, it was developed as a system because of the past, of what's happened in the past, right? We use support resistance because it has been known to work or to be an indication or an indicator because of what's happened in the past. We use insight candles in price action. Why? Because it shows as a potential reversal point because of the past. We use specific money management of 1 to 3% per trade if it's a stop loss system, 1 to 3% risk on each of our trades, because we know that it's a safe way to use risk management because of past experience and past knowledge and understanding. Every system is based on the past. So what I'm doing here is no different in that way, in that thinking, that we, as all traders, all of the systems that we're using, the system that you're using, Kreshev, I'm sure it's something, maybe it's a system that you're using, is based on the past. Now, the biggest advantage that we have as manual traders compared to EA trading is discretion. Now, discretion is, strangely enough, I like to call it a tool, an actual indicator for trading, because it's something that EAs don't have. They don't have discretion. This means this is the most powerful tool that we have in trading, and it means that we can analyze a trade because every trade is technically different, but we do have a system that is built upon price action that's happened in the past. Every indicator was built on some kind of price action or indication of what has happened in the past and what may happen in the future. So you can't say that this is that what I have is not beneficial, because what I'm studying here is not what's happened in the past, although that goes along with it. What I'm studying is the euro pound's psychology, its behavior to the market. And that behavior is that range that I'm talking about of 500 pips. Now, because I understand that range, doesn't mean that I'm not susceptible or I'm not at risk for total loss or my system turning going south on me. No, that could still happen. But what I'm doing is I'm pulling as much data as possible for the strategy I'm trading, in the hopes that the euro pound will continue to stay in this type of personality, the one that has been doing since 1993. Now, if it changes, then I'm going to have to change with it, and that's the hardest part. But that's something that I'm going to constantly be looking for, is to see if the euro pound is still staying within its behavior confinements. Okay. So let's see. It looks like Krashev. No, we take support resistance into consideration, but as manual traders, we look for confluence of things. We look at high priority news like Fed rates, price action, and reaction, etc. EAs can't do that. Yeah, that's basically what I just said, Krashev. There are tools that we have as manual traders. One of them I said was discretion. And EAs can look at high priority news. Yeah, definitely. There's coding that can be done where EAs can avoid the news. That's something that they can do. But they can't take the Fed rates and the news, the positive and negative news, and they can't run with that. EAs usually can just avoid that news trading at that time. They know when the news is coming, and they can choose to trade or not to trade during that time. But the tools that we have as manual traders are good, and that's one of them I said was discretion, and that's the most powerful manual trading tool we have. But EAs also have a benefit too, and that benefit is they can do things that manual traders can't really do, and that is exactly what I just mentioned, is a trading on a grid. And that's what I'm having, and that's one of the big money management tools that I have for this strategy, is it being able to do that. So there's benefits and drawbacks to each one. EAs can do strategies that manual traders can't do very well, and manual traders can do strategies that EAs can't do very well. And so you have to know what the benefits of EA trading are and use them to their strengths. If it's manual trading, you need to know what those benefits are and use those to your strength as well. So it's just knowing your market. It's knowing what tools you're using, knowing your market, and working with those. Krashev, I'm hoping that I'm answering your questions well enough. But the thing is I can't stress enough, guys, that this is every system is based on past price action or price movement. That's why a system was developed. That's why these indicators were developed. That's why we get an understanding of how they work, is how the market has worked in the past. And support and resistance is just another way of showing that. That as a tool that people use, and that's happened in the past. Um, so I think that's going to be it for today. And I thank you guys for watching um, the stream. And oh, we have one more question from Kreshev. Yeah, that's why indicators were developed, and that's why most of the traders lose money. Yes, that is a thing, Kreshev. I'm glad that you see that point, because all these indicators were built on following price action, and most of them are lagging. Most indicators are lagging, and so that causes us as traders to bounce into the market too late, or in some cases too early. Because we can get false signals on our indicators, false breakouts, all that kind of stuff. Most traders lose because one, we don't really know what the market's going to do. Two, our indicators are lagging or do false signals. And three, emotions. We have emotions, and it's hard to know when to exit trades, when to close them out. So there are multiple reasons why traders lose. But the biggest problem is the lack of good knowledge, and that's one of the reasons why I'm doing this stream. The lack of good knowledge on every website, every trading website. Forex Factory is a good place it has good knowledge, but there's also a lot of bad advice on that website, where you see so many traders trying to make 100% per month, and they lose their accounts every single day. That's bad advice and bad examples to follow. We need to stick with what real trading is, and that is making sure that our expectations are low, our psyche is clean and clear. And if we're trading with too much risk, that means that we're going to be worried about it, and we might make changes to our trading plan, that are unnecessary. But I think it's the idols that we look to, the people that we look up to. If you see somebody that's made 100% profit in a month or a week even, you're going to be like, that guy's amazing. He's so good. He must be like the best trader in the world. What you don't know is that trader that's trading 100% profit in a week is also risking his 100% of his account in that same week. And that's not real trading unless you know how to really work with that. If you make 100% in a week, maybe withdraw 100% of your profits and start over again. That might be something that makes more sense. But a lot of traders that look up to or idolize these type of traders don't take the necessary precautions in trading this type of way. And so they use this advice or these examples, and they run very south with them, causing major losses. So we need to start looking at the trading at the market in a different way, and that is maybe maximum what you should shoot for or starting to shoot for is 10% profit per month. I see on my thread at Forex Factory that 10% is a pretty good base to go for at least the traders expect. And if you find a strategy that works, if you find something that works, maybe you can expand it a little bit more, meaning that you can, let me see here. So here's a strategy that I'm working on, and this is something that has a lot lower risk that I'm using, and I'm working on pushing that further because of the drawdowns lower. So anyways, I think I'm getting off on a tangent. So I'm going to end this stream today, guys, and I'll pick things up on Monday, where we'll talk more about the markets, my current trades, see if I'm holding out on these positions until through the weekend. I doubt that I will close them out. And I'll see you on Monday for another session, and hopefully we can find something to talk about. All right, thanks, guys, and hope you have a good weekend. Bye.